The big news came today with the July jobs report. It finally reflected what a lot of us that are in the trenches have been feeling and saying, that the job market anyway, has been softening. And we saw fewer jobs added than expected, and past reports were revised way down, basically admitting hundreds of thousands of jobs that were said were created just weren't. And even though the unemployment rate did rise slightly, it doesn't really tell the full story because most of the job growth actually came from part-time work and full-time jobs actually dropped. It's not really a great sign for the economy. Markets are now thinking the Fed might cut rates as early as September. And when that happens, it doesn't really directly drop mortgage rates overnight, but it does open the door for them to come down, at least over time, especially if the Fed also starts buying mortgage bonds again, which they are not doing yet. Inflation from the PCE report that I mentioned came in right about where the market expected. Still higher than the Fed would have liked, but it's slowly cooling off. And consumers are spending less on things like travel and restaurants, which just shows more people are really tightening their belt and the economy is slowing. And that's the kind of environment that usually leads to lower interest rates, mortgage rates that is. And the Fed did keep that short-term rate, the Fed funds rate, steady, but two of its key members wanted to cut, and that hasn't happened in over 30 years. And it really matters because those two, are rumored to be in the running to replace Powell as Fed chair. And simply put, we could see a more aggressive push to bring rates down later this year. But vacancy rates on rentals are rising a bit, which could actually help lower rent inflation. And there is also a new law for VA loans, I think I mentioned before, that's going to let veterans who fall behind on payments push missed payments to the end of their loan, which would help prevent foreclosures and basically streamline help for military families. And totally separately, there's a new debate that's happening in DC right now about whether buyers should be able to use crypto assets without converting them to cash to qualify for a mortgage. Some lawmakers say it could help younger buyers, but others are worried about market stability. Nothing's passed yet, but it is being watched. And this week was, full of info and news that supports rates coming down, at least eventually. But we're not quite out of the woods yet. The good news is momentum seeming to build. And the next big market movers will be the September jobs reports and inflation numbers. And if those also show more weakness, we could see some really solid improvement. But until then, rates are probably, likely to kind of move sideways with daily ups and downs. But have a great weekend.